Yeah, so that's one idea. But what do you guys think? What's another idea for Dan? A way to maybe generate yield or take less risk, or
You
what do you
know,
guys think?
David, it's interesting that I watch Virtual Bacon every once in a while, and a lot of what he said, he rarely says like it's a time to buy, but he did say this month. What he called it the last big chance to buy altcoins, and he even called himself out because he's like, I never do this. And a lot of what he said is like you're gonna want to get shaken out. A lot of people are gonna get shaken out, but historically, if your outlook is, you know, quarterly or monthly or looking ahead, then you kind of expect this pain, more or less to kind of describe like buying the fear during that time period, and then it typically reaps rewards later. And so what I've done in some cases is some of that cash and pretty much a lot of it is I've set limit orders down there, and because I'm really focused heavily in Solana as far as like LP wise. So I have set some buy orders down and below 185, 185 or 175, and I've used Claude to just based on the volume at those levels and things of that sort. And then I'm just kind of leaving it, right? And the idea is to buy sold on those lower ends. And then right now my current ranges are 175 to 222. But if I buy the soul at these lower levels, I'm gonna add that to my upper ranges for kind of anticipating, the reversal, right? And so that's kind of the approach I've taken. And then what I've also done is the smaller microcap type of alts that I am holding, which are very small amounts. That you hold those open. They're lottery tickets, right? I've actually gone ahead and set those sell orders out there, and I use fibs, and I looked at like the 2618 and the 3618, and I've just set those quarterly buy sells out, and I'm just not even going to look at them. So what I've done is taken a lot of my emotion out of these things. Now, obviously, you can't be wrong, but I thought about that today, and I was like, if you're wrong, and then you break those support around 175 and things of that sort, or let's say Bitcoin drops and gives us a week below the 50, you know what? You just take the L. And then leave. But that's partly my approach is I'm trying to look at it as a the overall thing and not as much. I kind of expected this since we didn't get a lower September. So I'm trying to do little things to take my emotion out of it and take it so I don't have to make a snap decision, just kind of making those decisions and setting those things out there.
I like your thought process there, Justin. Doing your best to have a longer term perspective and try to take the emotion out of it, setting some buy orders well below the current price. I like that. Now, one thing, and I want to get to Ramsey and Ramon in just a second here, but one thing that I've been thinking about is, it's really difficult to discount digital assets. Bitcoin is a digital non-sovereign bearer asset, and those characteristics make it very similar to gold. I think that Bitcoin is superior to gold, but hey, the market is telling you that fiat debasement trade is Bitcoin is not the beneficiary of it right now. Gold is. Gold is trading like the fiat debasement asset. Bitcoin is not. So that's one item. The second item is for these smart contract protocols, Ethereum, Solana, Sui, Ton, XRP Ledger, you name it. There's a lot of them. For these smart contract protocols, yes, it's very easy to watch a guy like Larry Fink on CNBC say something like, we're going to tokenize everything. And that seems to be the direction in which markets are heading, that everything is going to be tokenized. But it's not tokenized today. And will everything be tokenized in 6 months? Usually, equities markets look ahead 6 months and discount that today. And so that's why, you hear that terminology like priced in. That rate cut is already priced in because it's already been discounted by markets. But how do you discount the price of ETH, let's say? Because all of the tokenization efforts, that hasn't happened yet. there's still a lot of regulatory uncertainty, and the protocols themselves really don't make much money. Like, it's not like they're massively successful businesses, the Ethereum Foundation or the Solana, I think it's called the Solana Foundation, or SUI. Like, these protocols don't really make much money. And so, and also the mechanism by which those revenues are returned to token holders, for many of these protocol coins, that mechanism is tenuous at best. So it's like, how do you really discount these? I think what you're looking at is you're looking at user growth and user adoption, and we're just not seeing these exponential rates of user growth, um, probably because retail is buying NVIDIA with zero DTE options. Like all of the flows are into equities. We're not seeing that euphoria in crypto and DeFi. So it's really difficult to discount this stuff looking forward. And so all I'm trying to do here, Justin, is say, I really like your long-term view, but there are also reasons to be cautious when you're taking that long-term view. Just because you have a 3 or 6 or 9 month view does not mean that things are going to be higher 3 or 6 or 9 months from now. There's a lot of difficulty in pricing these digital assets. Um, and I think that a lot of it comes down to user growth and adoption, because the cash flows just aren't there.